They say you don't gotta go home, but you can't stay here. And no, I don't wanna...
This is CryptoTube. Welcome to the channel. In today's video, we are looking at Kava, a small market cap coin with the intention of bringing DeFi to the wider crypto community. It's built on Cosmos, which is an interoperability blockchain. It can therefore offer its CDP loan platform to a wider range of cryptos and crypto assets. So if you like what you hear in today's video, then first of all, subscribe to the channel and then scroll yourself down to the comment section down below for the pinned comment where you'll see details of how you can win $10 worth of Kava. Kava came to market via the Binance Launchpad with its successful IEO taking place in October of 2019. Initially, it was on the Binance chain, which is called BEP2, and the token price at IEO was around 46 cents, and it raised $3 million through this IEO. It then actually launched its mainnet in November of 2019 on the Cosmos blockchain. And from there, we are a few months down the line, and this is the way that it's currently looking for Kava. So it's ranked 138th out of all cryptos, current price around 60 cents or 7,800 Satoshis, and a market cap of around $20 million only. And you can see from the price history that it hasn't fared too badly at all. Most of the IEO coins managed to pump and then dump. However, Kava has held its value well, which indicates that there is a lot of value within the project. If we just dip into the market pairs, it was initially only on Binance, but as you can see, the number of markets is actually growing quite considerably. We now have decent liquidity on Binance, Gate.io, BitMax, and a little bit on Bitrue as well. So you've got a few markets to actually play with within that. So looking at the blockchain and network data then, being built on the Cosmos blockchain actually has some real advantages for a project in the DeFi sector. Core feature being Tendermint consensus method, which is seen as a superior proof of stake mechanism. It is a method that actually is highly scalable. So as you'll see, the mean block time is around 1 to 3 seconds only. This means it can actually get a really great throughput of transactions up to 10,000 TPS. And it also gives single block finality as well. So this means that there's no waiting for transactions to be complete, whereas with some blockchains you may be waiting a few minutes or even hours. With this you get final and single block finality. Ideal for obviously a CDP platform, as the user needs to know that it has been accepted and everything goes through very quickly. Cosmos modularity is also part of the blockchain, and this essentially means that Kava can implement beneficial advances that are made across the Cosmos network. So this makes it an agile and fast developing project due to the blockchain in which it's built. Kava has some specific modules that make up its platform and their core architecture, this being the price feed, auction, CDP, and liquidator features, which I'll leave a link to down below so you can read up on this and understand what these mean, but they are essentially how the platform operates and how it will function within certain parameters or setups within the system. Over on the website then, Kava DeFi for crypto. Now, my main problem with the website, it is quite thin in terms of its information level and what they have to offer for us. This is one of the drawbacks of the project. It's been hard to actually find out a lot of in-depth information. Quite a lot of similar reading goes on, you know, from Medium to Reddit or whatever. It's kind of referencing the same points. But it's a CDP platform, and this is what they're building. The reason why it's cheap at this moment in time is because they haven't completed the actual platform. It's not available. We haven't got a live model to test. Therefore, the valuation reflects this. And this is why when you see a project that is good like this, prior to actually establishing itself, that's kind of when you need to weigh up what's the risk, what's the reward, and is it worth investing? I personally have invested in this already because I do see this having a bright future. However, the risks are if they are unable to get the technology to actually work, then it would be a failed project for some time and you're not going to see your investment back for a long while. Whilst in the meantime, you may have other projects coming and trying to do the same thing and possibly taking that number one spot. Kava at this moment in time has that first mover advantage. So if it does pay off, this could be huge, in my opinion. In terms of the team, Brian is the CEO and co-founder along with this guy here, Scott. Then we have Rodri O'Donnell, who is blockchain dev lead, and we have a team of roughly 10 individuals there. They do have some really great advisors. We've got Sunny Agarwal, we've got Robert Leshner from Compound, and we have Jack Zampolin from Tendermint. So they've got some knowledgeable dudes behind them actually advising them on the project. Within the website as well, you have access to their slide deck. So this is the slide deck. They kind of call it a white paper, but there's not much to it. So they first put forward the DeFi landscape and showing that lending is the only DeFi category with significant traction. We know that if you go into DeFi Pulse, you'll see almost all the money is in the lending categories. And Maker's CDP lending system is the number one in the game. They take Ethereum and Ethereum only, and they will be taking on some ERC20 tokens and possibly wrapped BTC in the near future. However, ETH is what you need to actually get into DeFi at the moment in time, and so that is kind of the gap in the market. Kava can offer different collaterals, different blockchains from BNB, Bitcoin, XRP, and Atom. So Maker has 2% of all ETH locked up, totaling $300 million in value, and Maker's market cap is around $500 million. So that's the landscape. Then the opportunity is that BTC, XRP, BNB, and Atom are big blockchains in themselves. BTC being a huge community, there are many Bitcoin maximalists, and at this current stage in time, they may be looking at Ethereum and the DeFi space and getting a little bit jealous. So this is where the opportunity arises for a player to enter the space and offer CDPs to these big blockchains. And we know also XRP is a very vocal, very big community on top of that. So integrating with just one of these would be great, but all four is going to be pretty much huge. Being first to market, built on the Cosmos SDK, Kava is able to build and iterate more quickly than the existing DeFi solutions. It is known that Ethereum is quite slow to develop on. And so if it can actually build the bridge for DeFi for these various projects or blockchains, they're going to see some tremendous growth. Kava gives multi-collateral debt positions. You can self-issue loans, so rather than have to speak to a third party or a middleman or get a credit check, you interact directly with software. The smart contract is going to accept the terms on which are laid out, and you're going to get your loan. So even if you've got bad credit rating, if you can put up the collateral, you're going to get your loan out in the form of USDX, which is their stablecoin. And this is a USD peg stablecoin made up of that multi-collateral that we see here. So how it works is a user would deposit their crypto. So in this case, they deposit their Bitcoin and they send it to the platform, to that smart contract. It then gets locked in the smart contract as collateral, and they are given USDX stablecoin as the loan at a particular loan to value ratio, which will be on the actual system and will be built in. The user can then withdraw their stable coin and then use that to pay for whatever. They can pay for their bills. They may decide to leverage. They may decide to hedge. Whatever they want to do, they can do. The user then can repay the debt plus the stability fee to unlock their collateral, so get their Bitcoin back. The crypto is then returned, the debt repaid, and the stablecoin is then burned. However, if a liquidation, which is this one here, actually happens, Like a margin call, the system will automatically liquidate the collateral if the debt to collateral value drops below a specific threshold. That means you lose your crypto. You still have the USDX, but you've lost the crypto that you've put up as collateral. So that is how the CDP works. I'm sure if you've used any of the Ethereum-based CDPs, you understand that fully. The Kava token then has some utilities such as governance. And it says, like Maker, Kava holders can vote on proposals to change the blockchain or the system parameters, including the total amount of USDX that can be issued, all the accepted collateral types, so they could expand into more collateral types, the collateral to debt ratio, and the price stability fee for the CDPs. It then has staking and validation within. So unlike Maker, Kava is a staking asset, which is helpful for network security. And users can actually delegate their voting rights to validators. So the validators run full nodes, but stakers with less coins and less technical know-how can delegate their stake. So this is a proof of stake method that allows us to stake our coins and receive a cut of those validation fees and the staking rewards. And I'll do a video on that because I will show you how I'm actually going to stake my Kava with a validator in a later video. But this essentially makes it possible to earn from your holdings. 100 million coins was the initial supply, and there is a staking reward ratio between 3 to 20% per year, and that is also the inflation rate of the blockchain. Fees earned from the CDPs, where fees are actually burned, so reducing the overall supply of Kava, and then through validator commissions, these nodes can also charge commission to users that delegate to stake to them. So often, if we delegate our stake, we'll get, say, 80, 90, 95% of the rewards in total, and the validator will take the rest. Many partners, including Ripple, Cosmos, Chainlink, you can add to this as well. This is a recent one, and the Cosmos Station. And then we have a roadmap which hasn't been updated as yet. So Kava token economics then, if we can get to understand the economics behind this. So there are transaction fees for using Kava and using its platform. This includes transferring of pegged assets to other users or transferring a pegged asset to the Kava collateral module, drawing USDX from a CDP or closing a CDP and sending USDX between users. So each of those would have a small transaction fee attached. So over time, the more people that use Kava and its platform, all these microtransactions soon build up to larger amounts, and that in turn creates value for the token. It has a deflationary fee structure. So it says when Kava users send, for example, a pegged XRP collateral to the Kava collateralized debt position, they can draw USDX up to the liquidation percentage of their collateral. Each CDP is subject to a USDX denominated stability fee that must be paid in Kava when the CDP is closed. The initial rate will be around 5%. So when CDPs are closed, the Kava that is used to pay the stability fee is burned, decreasing the total outstanding supply of Kava. So as an example, if CDP users close $10 million worth of USDX, that would mean 5% is 500,000 USDX worth of Kava will be burned during that period. Assuming a 10 million market cap and a total supply of 100 million coins, then 5 million Kava would be burned during that first year of operation. So you can see how over time they would be able to burn a lot of their coin. However, on the flip side, there is inflation on the to kind of counteract this. And this is what will be interesting to see what kind of wins out. We're used to inflation winning out over deflation, but over time, if the platform can get big enough, the inflation through these block rewards can actually be a lot less than the total deflation being taken out. So the number of new Kava created per block is variable and depends on the percentage of Kava supply that is staked in the network. So the target rate is around for 2/3 of Kava to be staked. So what they're saying is 2/3 of Kava staked is what they're aiming for. And if we can hit that target rate, which is roughly like 72 million coins staked, we will hit the minimal inflation rate, which is around 3%. The launch target rate is 7% inflation, but Kava can actually go up to a ceiling of 20% annualized inflation. So if no one decides to stake this coin, it will inflate at 20%. So whoever is staking the coin, so say one person is, they're going to be getting a huge amount of those block rewards. So they incentivize the network with a higher ROI when less people are staking, and it can get dropped down to just 3% when 2/3 or more of the network is actually staked. And we touched on this earlier, lender of last resort. In the event of the CDP system becoming under-collateralized, Kava will be minted and sold for USDX until the required collateralization ratio is restored. So this could potentially lead to more Kava being created, but this is a fail-safe for the system in case an under-collateralized position, which is very detrimental, ever came into place. So this is their backup. Kava and Chainlink did an AMA recently. I did hint on this on a video a few weeks back, and it was a really interesting watch, and it's around 30 minutes. There's a few real nuggets of gold within this. If you haven't checked it out, I would suggest going and doing so. So essentially, Chainlink will be providing secure Oracle data, price data for Kava. This means, well, it's obviously a very important thing. If you're dealing with real people's savings and their hard-earned crypto funds, you need to have that price data spot on. And so they've gone about this, and they will be using Chainlink's oracles. So within this, Brian kind of has an epiphany. He says, well, shoot, we can enable this to all Cosmos-based blockchains within the IBC and all bridges we're building to other blockchains. So we're building, for example, a bridge to Binance chain right now. Kava can become the hub where we have the data. We have blocks that go very, very fast, so we can have very frequent updates of that data and know that we can spread that data to the other blockchains that exist within the Cosmos ecosystem. So for example, Binance has a huge amount of value on its assets, and kind of a lot of individuals who would want to use this. So people don't know this, but there are over 80 different projects like these being developed on the Cosmos SDK. And today, developers across all those teams and all those developers have no access to high quality data. So now with Chainlink and Kava coming together, we can be the distributor and the place where they get high quality data to build whatever application or service they want to run. And it will be trustless and it will be reliable. So they're excited with this and the potential, outpouring of different things that can come from this. They're going to have the Chainlink Oracle data on Kava, and because Kava is interoperable with other blockchains, this is going to spread that data to other individuals who will then be able to leverage that. So pretty exciting times for the wider crypto community because of this Kava and Link partnership. So just to bring up the Maker CoinMarketCap data, they're ranked 28th in the world, a market cap of around $350 million at this time. So Kava's market cap, $20 million, Maker's 350, give or take. It's a pretty big jump up, but I can see why Kava could potentially get to these numbers fairly quickly once their platform opens. Now, this is the issue. The platform doesn't yet exist. It's going to be released this year, predicted for between, Q2, they have the first iteration of Cosmos and BNB integrations. So that should happen in between now and the end of June, I guess. And then the second half of the year, we have BTC and XRP integrations. So the year 2020 is a pretty massive year for Kava, and we'll see how quickly it catches on. Some of these communities are huge, so you could see the total value being locked into Kava platform shooting through the roof and surpassing everything that Maker's done to this point, because this has not been done before. And that's kind of the excitement behind this, and the reason why I think it can get to Maker's market cap within a 12-month period, which is almost a 20x from where it is right now, but it is definitely possible. So for full transparency, I have already bought my Kava tokens. I will be staking them and showing you how this is done to earn some additional passive income, or just to earn some more Kava on top of your Kava. It's always nice when your crypto tries to multiply itself. I invested in this as I do see a lot of potential in it. However, I also realized there is a lot of risk within it too. There's not a huge amount of data on Kava. This is pretty much the sum total of the information I was managed to gather that was really meaningful. So it would be nice to have a full white paper release, maybe some platform sneak peeks of what it's going to look like, so we can really judge the quality of it. However, integration with Chainlink is a big coup, and it is a bit of a safety mechanism as well. I see that as a reason why Kava will be successful. Also, they have stake with XRP. XRP have actually invested into Kava. There has been venture capitalists recently announcing a $750,000 investment in Kava as well. So there is smart money going into this right now. So I think we are prior to obviously a release of the platform, which means higher risk, but the risk to reward ratio is greatest right now, and it's trading around 7,000 Satoshis. So do your own research, guys, subscribe to the channel, and stay tuned for the staking update video. Thank you for watching, and goodbye.